Hello, welcome to the video. So nice to see you. It is my goal to make sure you have reliable mortgage information here in one spot. I found so much misinformation out there. Being a licensed loan professional, I run my own brokerage, that I feel that I needed to make this channel to share information to help you out. Today's video is inspired by a very unpleasant call I had this morning, and it's a good learning experience for everybody. The goal of this video is to briefly give you an explanation of what is a good interest rate, what is the best interest rate for you, how to shop for an interest rate, and how do you read a quote. So this morning I had a very unpleasant call from someone who randomly called me up, which, please do. If you're in the state of Texas, I want to compete with whatever lender you're working with to win your business. I am in a great spot to do so, and I can close on time, close quick, all that stuff. And they literally said, hello. I said, hello. So what's your interest rate? Okay, I'd love to help you with an interest rate quote. I need some more information to give you an accurate quote. No, what's your interest rate? Okay. So do you have a moment to let me explain the difference between me being a broker and a retail lender? No, what's your interest rate? So then I went on to explain that as a broker, I shop dozens of lenders on your behalf to find the best interest rate and fees that I possibly can, which usually ends up being significantly lower cost for the same exact 30-year fixed mortgage, for example, as a big retail lender. Literally, as I was trying to explain that part, she hung up. Have any of you had a bad experience with the lender in the past? Tell me all about it down in the comments. With this interaction, we both lost. I don't really care that I lost her as a customer because she was, frankly degrading to speak with. She, as the consumer, is being harmed by her own ignorance. As a broker, I literally do not have one interest rate. Every day, interest rates change, and there is a spread on the interest rate. There's par, which means you're not paying discount points, and there are discount points, which is a one-time fee in addition to all of your other closing costs to permanently decrease your interest rate. So when somebody asks me, Garrett, what's your interest rate? Today, for example, I could very easily say somewhere between 5.5 and 7.5%, depending on the loan program, your credit score, your down payment, and how many discount points you're looking to pay. So as you can see, that's kind of a crazy question to ask without providing a lot of information. The other reason simply shopping on the interest rate someone tells you is not good for you is most consumers, I would say 95% I've worked with, which is hundreds of people, and thousands of people I've helped pre-approve, they do not know how to read a fee worksheet, and they do not know how to read a loan estimate. They simply don't. And so if someone tells them a lower rate, most of the time, if they don't trust their current lender to give them a second chance to compete with the written estimate of the person you're shopping them with, they will just go to the other lender, no questions asked, even if that other lender is more expensive, apples to apples. They may have been recommending you stuff without quoting all of these points because they inherently know that quoting you something with points is bad for you because you're going to sell your home soon, or you think you're going to be able to refinance soon. In that case, you do not want to pay discount points. You never get that back. So that will cause you to waste thousands of dollars, and it is bad for you. But most consumers simply see the interest rate or listen to the interest rate on the phone and say, okay, well, that place is better. End of story. Bye-bye. There's so much more to the story when it comes to rates, as you can see. So you have to take into account discount points. You have to take into account how long you plan to own the property and what you believe interest rates are going to do in the next couple years. Some of the biggest online lenders quote with 2 or more points to try and suck you in. For example, one of the biggest online lenders quotes everything with 2 discount points. As a mortgage broker, I am reliably able to get the same interest rate with no discount points. So if you're getting a $300,000 loan and you go with that big online lender, it's $6,000 more expensive. You very likely will get a much worse customer experience because in these big companies, you're handed off to 15 different people throughout the process, and very few people take accountability if something wrong happens, which often does because there's such a lack of communication between all of these different parties. So you end up getting a more expensive loan with a worse experience for absolutely no reason. But because they quote a low rate online, it sucks in a huge portion of the population. Next up, I want to explain discount points in general. Each lender has different costs involved for the same exact rate. That's how it works. Some lenders need to pay 500,000 square feet of office space. They need to pay multi-billion-dollar marketing budgets. That money has to come from somewhere. So where it comes from is on average much more expensive loans. I just gave an example of. What I generally recommend is when you are first starting your pre-approval process, that at that point you shop the interest rate. Once you start the process with someone, it's going to be a big headache to go through it all over again. You don't necessarily know what your credit score is at that point, but if you give the same exact information to a couple of lenders on the same exact day, you're going to get accurate data which you can compare to see apples to apples who is cheaper. Now keep in mind, cheaper is not always better. There are many brokers out there who are not nearly as experienced as I, and as a broker, you have less support from the lenders you work with. That's why it is cheaper for the consumer. So if you do not have a super vanilla easy loan and you work with an inexperienced broker, there is a chance that your loan will not close and you will not get that house you're under contract for. Now, depending on the big retail and online lender you're working with as well, there's still a similar probability of that happening because frankly, there's just not a lot of highly experienced people in the industry. The people who are super highly experienced do get paid a lot, so they simply can't review every single scenario every single time. It just doesn't make sense. And so people fall through the cracks and scenarios fall through the cracks. Now back to my point about how you can shop apples to apples. So number one, the first error people get when comparing mortgage lenders and their fees and quotes. They do not shop on the same day. Mortgage interest rates change every day and sometimes multiple times a day if the market is volatile. So if you get your first quote from someone on Monday morning and then someone else takes a day or two to respond, red flag, a day or two later in the afternoon, that is not a comparison. Mistake number two, many borrowers do not get a quote in writing. This is a huge mistake. If you're getting a quote simply via email with a rate and APR and a fee, that's not that good. You need to get a full estimated worksheet. You generally cannot get a loan estimate unless you're actually under contract and have a property address. So it is not customary to ask for a loan estimate when you are in the pre-approval process. You can ask for a worksheet. You can ask for a written quote. They should be able to show all of these things to you. Mistake number three, a lot of people don't even know how to read or compare the written quotes that they do get. I grant you, there is a lot of information on those written quotes. The main things you need to be looking for are the lender fees and the fees that you cannot shop for, and if there is a lender credit involved. Generally, you'll see something along the lines of an underwriting fee, maybe a processing fee. So you need to first look at the company fee involved. Sometimes it's a couple of line items, but you need to add it all up so it's apples to apples. Some places charge $2,000 for an underwriting fee, others charge $1,200. Right there is $800 you could save off the bat. Next up is the actual discount points. If there are discount points involved, they will show up just in that same section next to the lender fees. It should be called points or discount points. It is a fee based on the percentage of the loan amount. So to keep it simple, if you have a $100,000 loan and someone is charging 2 points to get the interest rate they are quoting, it would be a non-refundable one-time fee at closing of $2,000 to get that interest rate. This is where you can begin to start comparing apples to apples. Because if you get an interest rate, for example, at 6% with 3 points, at 6.5% with 2 points, and 7% with 1 point, that doesn't mean the lender with the 6% rate is the best rate. It's very likely that all the other lenders can also get that 6% rate. But to get that same exact rate, it would require varying amounts of discount points. When people contact me to shop their quote, I generally request something in writing because most people do not know how to read the quote they already have. They found something on bankrate.com or they found something on Google interest rates, Zillow, Redfin, something like that. And it's a general rate, and more times than not, they didn't read the fine print either. So when they see that interest rate that's quoting in the fine print with 3 discount points, it's a waste of my time to discuss with that person what my interest rate is, because if I'm quoting an interest rate with 1 point and they're getting quoted 3 points and they don't even know they're getting quoted points, they're going to say, wow, this other lender's so much better. This guy's terrible. I'm not going to talk to him anymore. Hang up. Click. More often than not, that's not a good choice because you end up potentially getting ripped off as a consumer because you haven't actually discussed any of these things with the loan officer that you can trust. Finally, big mistake number 4, not working with a lender that you trust. So after you've already done some of the basic rate shopping, ahead of time. Many people are introduced by a lender from their realtor. If you're introduced to me from your realtor, hello, nice to speak with you. But not all lenders are created equal. Some are brand new. Some work with a company with extremely high costs and fees. Some are extremely experienced and knowledgeable, but they still have high costs and fees due to their company. And some people like myself are extremely knowledgeable and experienced, and they have very low fees because they started their own mortgage brokerage. You should understand when you are working with certain big box lenders and certain online lenders, you are literally just another cog in the machine. If you are talking with a loan officer who you are trusting with the biggest financial decision of your life, and they don't even ask you questions about what your goals are, all they want is to quote you an interest rate and get you onto the next person on their team so you can apply, that's not something you can trust. They have no reason to care about what's best for you. They just want another loan closed. And they make a very little amount on each loan they do close. Compare that to someone like a mortgage broker, where I have the time to find you a great deal and learn about what your options are. Because like in my earlier example, for someone who's just aimlessly shopping for the lowest interest rate, but is not taking into account fees or discount points, and they did not share with anyone that they're looking to sell their house in 3 to 5 years, they're going to get ripped off. It's really bad for them. They're going to make a terrible decision because someone at these big box lenders is more than happy to charge them 3 or 4 points to get a loan in their pipeline, even though it will cause you to lose thousands of dollars and sometimes $10,000 or $20,000 in points that you're never going to recoup when you sell your house or refinance. So it's important to understand the varying levels of expertise you get. It is important to ask the person of contact when you're first getting a loan quote or working on getting a pre-approval with a lender, how their process works and how many people will be involved in the process. For really good lenders, you're going to have only 1 or 2 or 3 people you communicate with throughout the whole process. When you go with some of these big box lenders and online lenders, you might end up being handed off to 5, 6, 7 different people. They might have a loan officer who's simply licensed to quote a rate and get you to apply. Then after you apply, you have to work with a setup person to finish your disclosure. Then after you finish your disclosures, you work with a processor who asks for some basic documentation per the loan guidelines. Then they submit that to the underwriter. And the underwriter will come back and say, hey, processor, I need X, Y, and Z documentation. And then they may or may not have someone else actually reach out to you to request those documents. Then they might have someone else discussing the closing disclosure with you. And then they might have someone else setting up the closing and final signing with you. You have so many different people in there where if you aren't the most vanilla easy loan ever, where you make $100,000 salary and all of your money is in just a checking account, you haven't made any recent transfers or any recent credit inquiries, or you have the most clean credit in the world, there's going to be problems they run into and there's going to be miscommunications. Contrast that with someone like myself, a boutique mortgage brokerage, where me and my small but very experienced team will basically pre-underwrite the loan for you in the pre-approval process, meaning we are going to think 3, 4, 5 steps ahead every single time in the process. Whereas everyone else, they're just going to try and mindlessly toss you onto the next person in the queue like a hot potato because they only have a very limited scope and very limited knowledge of their little piece of the process. My team will think many steps ahead and request all of these things up front. We need all of the documentation. Oh, we saw some large transfers on the bank statement last month. We need the other bank statements to source those things. Do you have any other funds that you could use as reserves to potentially get a better loan program or interest rate? There's so many things where when you work with a very experienced and small team, you're going to have the best experience possible. So all you need to do in the end is get your appraisal ordered, sign some paperwork with the title and escrow company, and then you show up and there's no surprises. Late last week, I was referred somebody in an emergency scenario who had to close in 3 business days because of their visa/immigration status. The lender thought they were able to use income that there's no way they would have been able to use, and that's simply due to inexperience or ignorance. If they would have come to me first for their pre-approval process, regardless of my interest rate, I would have told them, you can buy a shack for $50,000. You cannot afford a $300,000 home. The way they had that structured was totally wrong, and there's no way it would have gotten past underwriting in the end, unfortunately. So with this video, you hopefully learned how to shop for an interest rate, how to actually compare a quote between different lenders, some of the questions that you should be asking the lenders that you are potentially going to be working with, and you learned about some of the pitfalls about working with a lender that you can't trust or who is very inexperienced or who is just one part of a 10-piece set of people who is going to be passing around like a hot potato. For all you homeowners out there, have you had any nightmare scenarios? Please tell me in the comments. For any of you homeowners who recently purchased, how was your experience? Did it go well? Did the lender you work with seem knowledgeable and trustworthy? Did they pass you around like a hot potato? Let me know down in the comments. If you've watched this whole video and you are looking to obtain a mortgage for a purchase or refinance, you should have gotten some heavy bombs dropped on you and some great value. Please do subscribe and check out all my other videos for really great content I've put my heart and soul into to try and educate home buyers all over the country. And if you're in the state of Texas, I would love to help, whether it's being pre-approved or if you just recently got under contract, definitely give me a ring or an email right away. I will try my absolute best to compete and win your business and give you excellent service the whole way through. I want to be your lender for life and hopefully help make you all rich from home appreciation over the years. Have a wonderful day. Talk to you later.